Okay, good evening, everyone. Thanks for welcome to our Orkim Berhad IPO webinar tonight. Orkim Berhad will be listed on the main market on 9th of December. Orkim Berhad are principally involved in the clean petroleum product CPP and liquefied petroleum gas LPG marine tanker, primarily facilitating the transportation of cargo between domestic port coastal routes within Malaysia and across some neighborhood Asian countries. Here we're going to honor the company CEO, Captain 𝐻𝐿. Hi, Captain 𝐻𝐿.
Hi, good evening.
Hi, good evening. And our CFO, Puan Tahira. Hi, Puan Tahira. Hi.
Hello.
And our head of corporate finance, Eva Ho. Hi, Eva.
Hi.
Hi. Okay, let's review for the corporate video before we run through the presentation. Thank you.
Every journey begins with purpose. Ours was shaped by ambition, resilience, and a desire to serve the nation. This is our engine, not made of steel or fuel, but of people. Skilled, passionate, and tireless. We move all liquid oil cargoes, liquefied gases. We operate chemical petroleum tankers and LPG tankers, vital to the energy supply chain and the nation's energy security. With a leading position in terms of the number of CPP tankers registered in Malaysia, Orkim continues to lead with strength and reliability.
Our influence extends across domestic and the regional waters,
reinforcing our position as a trusted service provider. And through long-term partnerships, we deliver stable, recurring revenue, building financial stability and sustainable growth for the future. At the heart of Orkim's business operations lies a commitment to powering progress. And above all, safety. From humble beginnings to trusted maritime partner, this is our voyage of growth. We continue to expand and rejuvenate our fleet, allowing us to diversify products we transport, strengthening our capabilities at sea. Our high utilization rate is a testament to both safety excellence and operational excellence, a reputation built on safety and reliability. At Orkim, sustainability is more than a commitment, it's a responsibility. We are continuously enhancing our vessels to reduce environmental impact, driving greener operations across our fleet. Beyond the seas, we actively contribute to social responsibility, supporting communities and promoting well-being wherever we operate. Because for Orkim, progress means caring for both people and the planet. Our work shapes nations. We grow people, not just profits.
At Orkim Berhad, our vision is to be the market leader. We strive to be the best, not necessarily the biggest. Our progress is built on trust, consistency, and empowering our people. We move our products safely, reliably, creating sustainable value for our stakeholders.
Orkim's future is defined by growth and innovation. We are expanding and rejuvenating our fleet with younger, larger, and more versatile tankers, including both chemical and petroleum product carriers. Through our fleet modernization program, we ensure our vessels continue to meet the evolving environmental and HSSE standards. And by embracing technology and digitalization, we continue to strengthen operations, charting a safer, smarter, and more sustainable course ahead. We don't just deliver fuel, we deliver trust to ports, to our partners, to our people. Every success is a shared one. This journey is ours together. And safety at sea begins with us. Orkim, fueling the nation's maritime future.
All right, thanks for the corporate video. Without further ado, we'll start the presentation. Over to you, Captain Chi.
Thank you, Shavin, for the video. Let me walk you through about Orkim and briefly about introduction about Orkim. We started in 2007. We have 18 years of experience contributing to the nation's energy security and supply chain. We continue to expand our fleet, continue to grow, and we now have 16 vessels and 2 CPP tankers, 2 LPG vessels in our fleet. Altogether, we have 18 in service and 2 under construction. And all our ships are contracted with the key energy companies. And with in Malaysia, like we have our national oil company, Petronas, Shell Malaysia, Petron, and also BH Petrol. So all of them with us, Petronas and Shell have been with us since day one. And also in 2021, we started with Petron and also BH Petrol. So with this number of vessels in our fleet, give us a market share of 56%. This is the total tankers that are registered in Malaysia. So out of 27 that we have registered in Malaysia, so we have 16 of them. So our market share is about 56%. So our role in this energy security, we actually bridge between the oil refineries and also the consumer. So the product that we carry, that we transport, include the product that we use on daily basis, our diesel, petrol, including jet fuel, and also LPG gases, propane and butane, the one that we use for cooking gas every day. So we are in the midstream to downstream segment, shipping the product to the consumer. We are not in the upstream segment. We are not in the oil exploration segment. So mainly shipping the product to the consumer. So our footprint, all the liquid terminals in Malaysia, 25 locations, and also across Asia, up to India and Far Eastern port, South Korea, China, Japan, all the Southeast Asian ports. Now we have 68 locations outside Malaysia. Presently, our load capacity, our tonnage, 239 plus, almost about 240,000 deadweight. And our utilization, our vessel utilization, consistently high, above 90%. Last year was 92. This year, we're expecting about 92 as well. Our average age of our fleet, 12-year-old, relatively young compared to our national average age. And also this contributed or give us a very good financial standing, and our revenue above 300 million every year. And our EBITDA and also adjusted PAT, if you look at the adjusted PAT, the PAT on the CAGR of 22% for the past 3 years, 22 to 24. For the next page, I will touch a bit on the key events and our milestone. So as mentioned, we started in 2007 as a ship broking company and also providing ship management services for third-party vessels. Then in 2009, we take delivery of our first asset, our own asset, Orkim Power. And then from there on, in 2010, we continue to expand, including delivery of 5 new CPP tankers. And 2021 to 2013, we take another delivery of another 2, Express and Orkim Glory. Then in 2014, Ekuinas Berhad became our major shareholder. And then together with them, we continue to expand our growth trajectory. And we actually, between 2013 and 2018, we actually take position of about 5 CPP tankers and also 2 LPG tankers. These 2 LPG tankers, Orkim Gas Brilliance and also Orkim Gas Success, are the only LPG tankers that are registered in Malaysia. And in 2021, we entered into another segment, which is a bigger size vessel segment, that medium range size segment. This is when we take position of Orkim Fortitude. Orkim Fortitude is of the size of 48,000 deadweight. So this is also a Malaysian flag tankers registered in Malaysia. So this is also the only MR tanker, Malaysian flag MR tanker that is serving Petronas now. And in 2021, we began our fleet rejuvenation plan. So we take delivery of 5 new vessels, and also we disposed 5 plus 1 vessel last year. So And then 2024, continuing our rejuvenation plan, 2024, we entered into 2 shipbuilding contracts, presently under construction in one of the shipyards in China, Tier 1 shipyard in China in �𝐬𝐤𝐢𝐦. So this is 𝐎𝐿𝐦 and 𝐿PG. So these 2 vessels is also backed with a contract with one of the oil major in Malaysia, the key energy companies in Malaysia. 2025, following our plan on expansion plan, we recently take acquisition or take delivery of our second MR tanker. This is the largest, 50,000 ton deadweight, Orkim C3, and this is also a different type. It's a type 2 tanker. So this is, we can call it as a chemical tanker, and oil and chemical tanker. And this ship is larger and also more flexible, allow us to carry oil product, chemical product, and also edible oil. So a bit on our strength as a leading Malaysian tanker operator. So we have proven track record as owner and operator. We own and we operate and we manage our own fleet. That gives us a bit of more, we run our operation more efficient and also more economy of scale. And with our fleet size, 56% of the market share here in Malaysia, Malaysian-registered tanker, allow us to fulfill all the critical domestic demand, energy demand in Malaysia. And our ships are all contracted, give us recurring revenue, and also give us long-term, visibility on our earnings and also assurance on the cash flow. And all our ships, as mentioned, are contracted with the key energy companies in Malaysia, and we actually serve all the 4 key energy companies in Malaysia. Our national oil company, Petronas, Shell Malaysia, Petron, and also BH Petrol. And our ship, as mentioned, average age about 12, relatively young, and also come with the shallow depth capabilities, allow us to call ports with shallow depth. There are a few ports in Sarawak and Sabah that are restricted to the depth of 7 meters. So these are the vessels that actually can deliver the product and cargoes there in this kind of this port in that areas. And back with a team of experience, and also many of them are day one with us, our key senior management team, and also captain, crew, and officers on board. Right. The next one is elaborate a bit on our proven track record as an owner and operator. So if you look at our number of port calls in Malaysia, it's about 4,900, and in Singapore it's about 1,200, and outside of Malaysia and Singapore we have about 500. That is across the region, and including Asia, India, and Far Eastern port and Southeast Asia. And long-term relationship again with our national oil company, 16 years with them. Shell Malaysia, 15 years with them, and in 2021 we started with Petron and BHP, and the 2 LPG tankers that we have, Orkim Gas Brilliance and Success. Upon delivery, we actually served Nippon Gas Line for 10 years before we actually brought back the vessel and to serve now, serving Petronas Dagangan Berhad. On leading market position, as mentioned, out of 27 Malaysian-registered tankers, we actually own and operate 15 of them. So that gives us a market share of 56%. This is particularly important because Malaysia, we have this cabotage policy. When cargo to be shipped within ports in Malaysia, we need to use a Malaysian flag vessel. So, and presently, it is not enough. There's a huge shortage of Malaysian flag tankers that's serving the domestic market or to ship the product within ports in Malaysia, and we that is give us an opportunity for us to expand and continue on our growth. So the next one on our vessel, which are contracted with the key energy companies. So we offer flexibility in terms of contract with the charterers. We have short-term, mid-term, long-term, and different type of contract as well. We have time charter, we have a consecutive voyage charter, then we have contract of affreightment, and also we do have a spot shipment in between. So for 1 to 2 years contract tenure, we have 6 of them, and 2 to 5 years, we have 4 of them, and 6 to 10 years, we have 8 of them. So this gives us a consistent and predictable revenue inflow, and assures a stable cash flow, and we can actually forecast more accurate and give us, if you look at the past financial result, it's a very solid financial performance, right? So on time charter itself, the remaining estimated contract value is about 614 million. So the remaining of the contract value on CBC and COA is about 1.1 billion. That's the remaining contract value. The next one on the strong customer base anchored by key energy companies in Malaysia. So we serve all four of them, Petronas, Shell, Petron and BHP. We have established a very long-term relationship with them. Continuously, our contract being renewed. And even like Petron and BHP, we started with them in 2021 and it is renewed. And this is most probably is on the third renewal cycle. We just got BHP renewed recently. So it is always on continuous renewal. So the next one is on our fleet, relatively young vessel fleet, and also our shell depth capabilities. So these vessels are specifically built to accommodate all terminals in this region and also especially in Malaysia. And younger fleet, this is the charterer's preference. They want the younger fleet and give us a longer revenue life cycle. Improve fuel efficiencies. The fleet that we take delivery in 2021 come with a greener engine, give us about 20% lesser consumption compared to the older fleet, and that indirectly actually contributed to a lesser emission. And lower downtime, younger vessel, when we go for our scheduled maintenance, scheduled dry docking, every 2.5 years, it's mandated for us to go for scheduled dry docking. And with a younger vessel, we actually incurred about 2 to 3 weeks kind of dry docking. Enhanced safety features. Maritime industry, very dynamic, and also the rules will be updated, and we continue to comply. And newer rules always focus on environmental and also safety. So our ships, the younger vessel, meeting all the safety criteria that is required by the flag state and also by the internationally global standards. A little bit about our shore team and also team on board. So presently we have about 360 seafarers serving on board now, and we have another set of about 300 ashore. So they are on a 6-monthly rotational basis. Even though they are on contract, they are contracted on contract with us on 6-monthly basis, but our retention rate is very high, above 90. So all our crew rejoin back when they complete their vacation at home. So a bit about me, I sailed for 12 years, and then so I joined Orkim in 2012. And in 2021, I was appointed as a CEO, and I have with me Puan Tahira, my CFO. Also, more than 20 years in industry. Previously was with MIC, then have becoming like Sapura, and also the last was with Malaysian Airport. And joined us back in this year, early this year. And below, in the list, we have our financial controller, Mr. Wong PV, also more than 30 years in industry. Captain Zahid, our GM of Marine Operation, more than 25 years in industry. Then we have David Khoo, General Manager of Chartering, more than 15 years in industry, and also Mr. Leong Min Kiong, our General Manager of Technical, and General Manager of Human Resources, more than 20 years in industry, and also Mr. Rahimi, General Manager of Commercial, more than 30 years in industry. So most of them, all of them, except for Puan Azni, 5 years with us, most of them actually with us since day one. So our key senior management average about 12 years with us. So on future strategies and use of proceeds, we will continue with our growth momentum. We will continue to take advantage on the shortages of Malaysian flag vessel. We will continue to serve to make sure that energy security in Malaysia is protected. And we are going to expand into younger ships, larger and more flexible tanker that will be chemical and petroleum product tankers. And continue to modernize our fleet, to retrofit and upgrade, and also to adopt technology advancement, particularly on digitalization and also automation. So on fleet expansion, so we have started this year. We have taken delivery of 1 MR tanker, 50,000 deadweight, Orkim C3. We took delivery about 3 weeks ago, and now it's performing her 3rd voyages. And next year, we will be taking acquisition of another 2 chemical tankers, smaller size, up to about 10 to 15,000 deadweight. And also in 2027, we will take delivery of 2 CPP tankers, 14,500 deadweight ton, presently under construction, and back with a contract with one of the key energy companies in Malaysia. So on fleet modernization, we will continue to retrofit and to upgrade to meet the latest environmental regulation requirement, and also to optimize on our vessel performance through better hull maintenance. For example, we have a few ships underwent dry docking last few months, and all these ships are coated with special coating on the hull, give us a better reduce on the fuel consumption, reduce on emission indirectly, and also many of our ships are retrofitted with energy-saving devices that give us better speed, reduction of consumption, and directly lead to reduction of emission. Right. So on technology and advancement, so we will be upgrading our control center ashore and also on board to give better data and to enhance on navigational safety. And also this system will also allow us to have a better route, to optimize our route, the most economical, the most safest, and also we can actually have a better uptime on our ships, and also to continue to upgrade our plant maintenance system to actually have a predictive maintenance, give us an early detection, especially on accelerated wear and tear on board of a component and also on the machineries, and also to upgrade on crew management system. Presently, it's already electronic, but we're going to upgrade with automated and also regulatory compliance. For example, the environmental related or carbon emission related reporting, we want it to be automated, and also to enhance our ship on cybersecurity. So a little bit on industry overview. So as mentioned, the demand for energy, the demand for fuel energy is constantly growing, almost tied up with our GDP. I think our GDP in 2026 projected to be 4 to 4.5%. I think for the energy consumption is about, for the past 3 years, is on a figure of 6 to 7%. So the demand for energy, not only in Malaysia, but across Southeast Asia. Southeast Asia, understand that the fastest growing region in the world. So there is a huge demand for energy, and also demand for Malaysian flag tankers. So our country is actually protected with the cabotage law. So that gives us a degree of protection and also operation support for domestic owners. So you need to use Malaysian flag tankers. So presently, if you look at the foreign flag tankers that plying between Malaysian ports, there are so many. I think it's about 2.5 times to 3 times of Malaysian flag tankers. So a bit on barriers to entry to this segment or to shipping segment. High capital requirement. A smaller one easily costs about 100 million ringgit. And also normally to get ship financing, we need to have this asset backed with a contract, long-term contract. Without a good track record, without a good long-term relationship with the oil majors, it is almost highly unlikely to have a long-term contract with them. So this is some of the advantage that we have, a long-term relationship with them, and also long-term relationship with the financier as well. And compliance, another one is compliance with the energy company's requirement. So to serve these key energy companies such as Petronas, Shell, Petron, BHP, so we need to demonstrate our compliance with the international standards, particularly on safety. And we have to go through many types of audits, many types of inspection on board, and also ashore to make sure that we comply with the latest requirement to comply with their assurance criteria. And we have a very good track record with them. We were awarded as the Ship of the Year in 2025 and top performer in oil loss, integrity of operation from Shell in 2022 until now. And then we also received awards like the most outstanding shipping company in Malaysia and the best shipping company in Malaysia for consecutive years. So a bit on a Malaysian context. So if you want to ship petrol product from a port, within ports in Malaysia, you need to have a domestic shipping license you need to be a Malaysian flag tankers. Unless they are not available, then you can opt for foreign flag tankers. And if you have a Malaysian flag tankers, indirectly it's like you have the first right of the cargo. And then for tanker segment, you need to comply with the Petroleum Development Act 1975. So to transport this product, you need to have PDA license 3. And to have PDA license 3, you need to be a Malaysian company. So the next one, I will hand over to my CFO on the financial overview.
Okay, so next slides on the revenue overview. So this is our revenue for the last 3 years up to 2024 and the latest June position, June 2025. For the last 3 years, our CAGR for the revenue is 0.2%. So this is due to the number of vessels that we operate during the respective financial year. So as our business are capacity driven, so revenue directly related to the number of vessels that we have. So in 2022, we operated 22 vessels. So they explain the higher revenue as compared to 2023, whereby we disposed 4 vessels in 2022. So caused our revenue to reduce in 2023. And then by the reduction in the number of vessels was being offset by our vessel utilization, improved vessel utilization year on year, and also the increase in average TCR. So if you look at the table on the right side, so you can see that our vessel utilization rate year on year has been between 91% to 92%, except for year 2022 because of the disposal of 4 vessels. So in June 2025, so our utilization is at 91.6%, and our average DCR, if you look at the table, also has been on the increasing trend from 50,000 in 2022, and at the current financial period, we recorded 54,000 average daily charter rate per day. So in terms of our interest coverage ratio, so 2022, the coverage ratio was 2 times, and it has improved to 8 times in June 2025. So this is because of 2 things. One, because of the improved EBIT year on year, and the other reason because of the lower finance costs over the years. So over the years, we have been religiously deleveraging. We pay our borrowing, so our finance cost has been reducing over the years. That has improved our interest coverage ratio as well. So next slides. Next slides. So in terms of key financial metrics, our GP and GP margin are very healthy. So on average, our GP and GP margin from 37 to 38% over the years. In June 2025, that reduced a bit because in 2024 we disposed 1 vessels. So in 2025, so because of the lower revenue in 2025, that has reduced our GP margin. So other than that, our adjusted EBITDA margin, so our adjusted EBITDA margin and adjusted PAT margin, this has been normalized with loss on disposal. We normalized one of loss on disposal in year 2022. That was 32 million loss on disposal, and we also normalized 4.5 million gain on disposal in year 2024. So on average, our adjusted EBITDA CAGR is about 9%. So our 9.2%. So our adjusted EBITDA margin, if we compare to our cash flow from operation, is almost 1-to-1. So it means so whatever we is a proxy lah. So whatever we record as EBITDA, it will be converted into cash flow. So the other reason is because of our strong customer base. So our trade receivables also ratio also very healthy. Within all our trade receivables, ratio is within the credit terms almost 30 days. So that is reflected in the adjusted EBITDA and fall through to our cash flow from operations. So the other thing is our adjusted PAT margin. So CAGR of 21% over the last 3 years from 2022 to 2024. So this is due to the repayment of borrowings that we have done over the years. So that caused the interest expense to reduce, hence increase the adjusted PAT CAGR is more than the increase in the adjusted EBITDA CAGR. And despite lower revenue in June 2025, our PAT margin has improved as compared to last year, June 2024. That is also because of the savings in the interest expense in June 2025. So next slide. So in terms of our dividend policy, so our target dividend payout, so our dividend policy is to distribute 50 to 70% of our PAT attributable to the owners. So this year we have paid 50 million. So in April, so that represent 54% of PAT for year 2024. So in October, so we have paid another 18 million interim dividend. So recently in October, we have got our board approval to declare interim dividend of 20 million, and this will be paid in January 2026. So just to summarize financials. So in terms of our liquidity, so we have strong cash flow generations. So like I mentioned, so what our EBITDA is our proxy of our cash flow. We have strong balance sheet as of June. So our retained earning was close to 500 million. So there's in terms of dividend policy is sustainable. So we have unutilized support of 700 million. So during early this year, February, we issued Sukuk program 1 billion. So we have issued 300 million, 227 million out of 300 million used to refinance our existing loan. So that has reduced our interest rate further because we convert from floating interest rate, which was higher, to Sukuk, which 2 tranches. One tranche is 5 years, 4.32%, and the other tranches 7 years, 4.48%. So our debt to equity ratio, DE ratio, gross DE ratio, as of June was 0.7 times. So it's our Sukuk program covenant, financial covenant is 1.5 times. So we have enough sufficient headroom for our future expansion growth. So that's to just recap on the financial. So that's my last slide. So we are happy to take on any questions.
Okay, thank you, Puan Tahira and Captain Che. All
Thank you.
right. Okay, are you guys all get ready for the Q&A section? Okay, let's start for the first question. Oh, okay, asking for the name. How does the name Orkim come about?
Okay, the name Orkim come about. I do not think this is very important for investment, but I can elaborate a bit on this. So our founder actually is originally from Penang, me too. So Orkim is actually one of the Chinese dialect, black gold. So I think they will understand. I think the meaning of Orkim is actually black gold. Oil.
Okay, got it. Okay, thank you. Okay, asking about the dividend payout. Is this will be in quarterly basis?
Our dividend policy is to distribute away our 50 to 50% out of our profit. But For the past 2 years, we have interim, and also we have the final one. And that will be decided during our board meeting. But of course, I think the most important is the quantum of the dividend that we are able to actually to pay out.
Okay, asking about your peers. Is Yinson and Armada is your competitor?
They are not. They are in the oil and gas. They do have vessels, but actually they are specialized vessels in oil and gas, the upstream segment, which is very much related to exploration. And for us, we actually shipping. We are a shipping company. We ship product to the consumer. So ours is on the energy security. We ship product to the consumer, and downstream to midstream kind of segment, not the upstream segment. I believe they are more on a specialized project on the upstream segment.
Yep, correct. They are upstream and then you are downstream and between the midstream and shipping. Yep. Okay. How do you leverage your 56% market share to improve pricing without affecting your customer relationships?
Okay, 56% is actually market share on Malaysian flag tankers. But if you look at the amount of the product that we actually transported, that's only about 12% of the total that being consumed in this domestic segment. But that includes all the pipeline and also the road tankers. So it's still very small. 56% is actually 56 is actually on the Malaysian flag tankers. So if you look at the total, actually we have enough big room for it to expand. Right?
Okay. Okay, asking for your new market. Are you expanding into new segment like the small scale LNG or chemical tanker, especially given your move into MR and LPG tankers?
Yes, one of our plan for our expansion is actually to go for younger and also more flexible tankers. So that will be the chemical tankers, but not necessarily we only ship chemical. So we can ship oil product, chemical, and also edible oil, palm oil. And we will look at the market. If the chemical market is good, we can bring chemical cargoes. If the CPP market is good, we can bring CPP product tankers, CPP product. And also in the future, I think we will have many types of fuel, many types of energies, not only restricted to fossil fuel, petrol, or diesel. So methanol can be one of the alternative fuel. So this vessel would be able to ship alternative fuel as well. On small scale LNG segment, okay, we have a look into that, but for us, we are very careful when we want to select any project. It must be meeting our margin, must be profitable, and we will be very selective because we understand that we have investors, and also we need to make sure that they invest in the correct company, right? So we carefully choose and select the type of project that we're going to undertake.
Okay, got it. Then not only ship for the CPG and LPG, also other petrochemical and also other like crude palm oil also?
Correct.
Okay. What percentage of your 614 million backlog, including inflation or bunker adjustment protection?
Okay, this 614 million is actually the remaining contract value for the time charter contract. Time charter contract, the fuel and also the port charges is actually borne by the charterers. So we are not affected, we are not impacted on the bunker adjustment and also inflation on the bunker.
Okay. Okay. How do you maintain your probability in CVC or COA contract when cargo schedule is fluctuate?
Okay, that is the reason why we have our key senior management, especially in commercial. If you look at the lease, they are more than 30 years, and David Khoo, more than 15 years, actually started his career in this company alone. And we are very, very, we monitor the movement very closely. We look at the positioning. We want to make sure that positioning is positive. And also for CVC and CO contract, the more voyage that we perform, that give us a more revenue. So if you look at our CVC and COA contract and the utilization is always above 90%. So that itself gives you that, how efficient that we operate this vessel.
And CVC and COA contract, your is the flexible, right? The price.
Yes.
Okay. Okay. Oh, asking for your AI investment. What measurable cost saving do you target from AI routing and the maintenance?
Okay, we have not embarked into AI routing yet. Yes, we are meeting a few provider on AI. They will actually the system actually can predict for your scheduling and all that. But cost saving, I think not very much about cost saving, but actually to optimize our route to route optimization and to have better revenue from the to actually to get market upside, for example. On predictive maintenance, yes. So presently, our maintenance system is actually electronic, but it's still based on running hour based, periodically based. So every 6 months you have to do this maintenance. But if we put sensors into or component into the machineries, into the system, so accelerated wear and tear, we can actually get the warning or this one earlier. We don't have to stop. Actually, we can actually do the maintenance well before actually the wear and tear happen. So that not only give us cost saving, but actually give us better vessel uptime.
Also help you to improve your business and efficient more.
Correct.
Okay. Okay, asking for your leasing. Will you consider alternative financing, maybe for the leasing FPV for new vessel purchase?
As of now, we have our term financing. Actually, this industry the government also encouraged the industry to grow. So we have some sort of subsidized rate when it comes to term financing from the banks. So we have our term financing. So we have our Sukuk, unutilized Sukuk fund of about 700 million. It's perpetual. And also now we are into the capital market, is one of them. So our expansion plan moving forward will be utilizing all these three funds. We have not done any leasing SPV yet, but we also look into that. Provided any kind of financing is good for us, we will go and look into that.
Okay. Are there any cross-selling opportunity between your LPG and CPP customer segments?
I don't really understand about cross-selling between LPG and CPP.
I think it's asking, is this the customer purchase these two chemical in the one time?
Oh, so we don't mix our LPG cargo with our CPP tanker cargos. We ship LPG is a liquefied pressurized petroleum gases, so it is a special type of tankers that we use to ship this cargo. And CPP liquid cargo, so we carry a petroleum product, clean petroleum product, the one that is used by consumer. Can be the same customer, but we don't cross loading or using the same ship for the both cargos.
Okay. How do you positioning yourself to capture volume growth from the PIPC expansion?
PIPC is Rakuten Pengerang.
Yeah.
Is it? Yeah. So in 2021, actually, we have 5 new builds, and actually 2 of them with the size of 14,500 deadweight is actually meant for that project. And to position ourselves, these are few vessels that are actually suitable to load for in this Rakuten Pengerang actually.
Oh, asking for the contract again. How do you decide the optimal mix between time charter and CVC or COA exposure?
Okay, for us, the best is what we're having now, a mixture of different type of contract. With the time charter, especially long-term time charter, give us a long-term visibility. So we know what we're going to earn, give us some assurance on the cash flow. But with CVC and COA, we need to really optimize the route, the voyage. We need to perform more voyages, and we need to have a very good scheduling. And also, but with this COA and CVC, we can get the market upside. So mixture of these few contracts give us the best, the optimum earning. That's why you can see on our revenue, on our GP margin, is relatively higher.
Yep. Okay. Another question, I think just now we answered it.
Yeah,
How do you
I
maintain
answered that.
profitability? Yeah. Do you have anything want to add on?
None. I think I have answered on the schedule because you need to
Yep.
optimize and scheduling and positive positioning, for example.
Okay, sure. Thank you. And okay, how do you avoid downward rate pressure since you have served all 4 major energy companies?
If you look at our history or trending, we have an escalation. If you look at our DCF also, sorry, a daily charter rate, actually is on the increasing trend, and we shouldn't look at them or look at the 4 energy companies that we are serving as our client or customer, but actually we have this very strong partnership, and they understand very well when there is inflation, we need to have some small escalation. So, for example, our contract that we renewed recently with escalation, so they understand that very well. We are here actually to serve and to make sure that the domestic supply chain is actually sufficient product or sufficient energy are shipped, and especially on the system cargo.
What is your emergency plan, backup plan, if CPP fresh rate face oversupply in the region?
Okay, if you look at the trend and the history, we never have issue or problem or face on the demand of energy. Well, except for COVID. After post-COVID, immediately we come back to the normalcy, because it is always on the growth, on the CAGR. Until up to 2030, maybe there's a plateau, but doesn't mean that there's a reduction. You do not, don't increase anymore on the fossil fuel, but you have a plateau. And if you look at the order book for tankers, after COVID, post-COVID, I think there are many orders for LNG and also on container ship that actually we have a very less order book for tankers, especially. So we do not foresee this kind of problem in the future or next few years, and also align with the market outlook produced by the shipbroker around the world.
Okay, asking for MR contract. Which of the 4 major customers prefer for long-term MR contracts?
Our MR contract, the 2 ships is actually serving our national oil companies, and of course, I think the other 3 energy companies do need MR tanker, but the shipment for MR tanker is lesser compared to national oil company. And also MR size tanker, you can actually call, I think, about 5 terminals in Malaysia. So on and off, we also ship to regional ports when we export the cargo outside. So you can say all of them, they actually utilize MR tanker.
All of them.
Yeah.
Okay. Okay. Which customer give the highest margin but demand the highest operation complexity?
Actually, almost the same. And actually, our margin is not only the factor of the freight rates. It's actually how we manage our costs, how we optimize our routes, and we manage our own fleet. So economy of scale, we standardize our machineries, for example, and we have crew on board with a very good retention rate, and also many years with us, so that actually improve on the efficiency and operational excellence. So I can say almost the same, all of them.
Okay, quite good. You maintain your staff, also your quality and then transportation services. Okay, what is the reason that tax payment is lesser than 24%? Is this because of any tax incentive, or can we expect the tax payment rate is still comparable in the future?
Okay, income for shipping is, but especially in Malaysia, is actually tax exempted. So maybe it is under this Income Tax Act 54A and B. So presently, it is fully exempted. And perhaps on the 24%, you want to explain a bit further?
So shipping, we benefits from the tax exemption under Section 54A. So under Section 54A, tax exemption is 70%. So currently it's 100% because of the PU order. So this PU order gives us another 30% tax exemption, so which is 100% exempted. And this PU order will be until 2026. So historically, so since 2012, so this every 2 and 3 years, tax exemption has been renewed now. So the last it's on 2020 expiring in 2026. But currently what happened is MASA, the industry, Malaysian Ship Owner Associations, we are working very closely with the ministries, MOT and also MOF, to extend the exemption further after the 2026. So we are waiting for the developments from the both ministries.
Okay, thanks for the explanation. Okay, okay. Do Orkim has a similarity with 𝐎𝐫𝐤𝐦? If yes, why?
No, because 𝐎𝐫𝐤𝐦, again, upstream, oil and gas exploration, we are shipping for the consumer. We're shipping energy for the consumer. Downstream, totally separate from the upstream.
Okay. Okay. Who are your shipbuilders also? What are the delivery timelines, and are there any risk for delays?
Okay, the present, the two under construction, Orkim 𝐁𝐡𝐝 and Ruby, is being built in one of the tier 1 shipyard in China, the Fujian Southeast Group, 𝐎𝐤𝐦. So this is a very famous yacht, very big yacht in China. They have about 150 in their order book, mostly tankers, big tankers, and also the VLCCs. And we have experience with them. We built 5 tankers with them back in 2020, delivered 2021. Even with lockdown, I think in China you have lockdown for months, but the project was actually, the ship was actually delivered earlier. So risk of delay, we do not foresee that. This is on their track record. And also, if there is a risk of delay, it's also we are insured on this risk.
Oh, okay, asking for dividend yield. Based on the IPO price of 9 cents, what is the dividend yield for financial year 2024 result?
About 5.5%.
5.5%. Okay. Okay. I think we answered almost all of the question tonight. Okay. Okay, Captain Chi, do you want to explain more on the two purchasing the fleet just now you mentioned?
The 2 ships under construction?
Yeah.
Okay, this is a project with Shell Malaysia. I think it is available in the press as well. I think last year that we have a contract with them. So we actually have a long discussion with them to develop a more efficient tankers for them and to replace and rejuvenate our existing fleet. And this is largest size, 14,500 deadweight. Actually, one ship itself actually can replace 2 of the smaller ship of 7,000 deadweight. So the engine is a much more efficient engine, even with NOx and SOx emission, which can go up to tier 3 kind of compliance. And also this ship is actually come with nitrogen plant. So this nitrogen plant, instead of having an IG plant, inert gas plant, this is very clean gas, and you don't have to do mopping. You're very sure that once you do the tank washing, there will be no liquid remaining in the cargo, so you can load your cargo safely and without any contamination. And also the spec that we have is one of the highest, one of the best machinery that we put on board. So we are looking forward to deliver the ship. That will be in 2027. Hopefully, year-end 26, we can have one, and then maybe in February, we can have another one to serve Shell, and we can see that performance in in our fleet.
Okay, one in year year end of the 2027, and then one is the another on 2027. Okay, and then I saw it that your average age for your fleet, the tanker, is like 12 years, right? And then the maximum is 20s or
No,
30s?
I think it's about around 18 because they are still, some of them is more than 15-year-old because they are still having the contract with them. So we have, this is included in our rejuvenation plan. So the next couple of years, so when we bring in a younger vessel, so we will replace them with a younger vessel. But our average age that we want to have in our fleet is about 12.
Okay. Just now you mentioned that you will replace for the young tanker for the 6 to 18 years old for the 8 CPP tanker, right?
Yeah.
Okay, quite good. Okay, I think all the investors quite happy for tonight. Okay. Another
There's
question
one more, I
for.
think there's one more. I saw there's one more question.
Oh, okay. How many vessels you have? Okay.
Okay, we have 20, 18 in service, 2 under construction.
Okay. 18 is already 2 under construction. And the 18 is 16 for CPP and 2 for LPG, right?
LPG tankers, correct.
Okay. All right. Before we end the webinar tonight, is there any the closing remark for our investor?
Okay, we have been very disciplined on our capital allocation. So we handle, we own and manage one of the largest fleet in Malaysia, particularly on the domestic segment. Aggressively, we deleverage to look at our DE ratio 0.7, and also we are distributing away 50 to 70% of DAT.
Okay. Okay, quite nice. Okay, all right. Thanks, Captain Che, and thanks Puan Tahira and Ivanhoe for tonight's presentation for us about Orkim Berhad. Okay, and once again, congrats about upcoming listing on the main market on 9th of December. Thank you. Thank you, everyone.
Thank you. Have a good night. Thank you.
Okay, have a nice day. Bye.